What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide current events, and I also do daily content on X at Hemi137, so you can follow me there as well to get daily updates or a pulse on the market. So before we get started, go ahead and drop a thumbs up, and let's go ahead and kick this week off. As a lot of information has essentially happened over the past week. We've had some interesting events. I really wasn't expecting a lot, but one thing to consider is a lot has happened. So with that being said, let's go ahead and get into what happened over the past week. So last week we did have core CPI, which is unchanged at 4%. Again, this is headline inflation. A lot of people don't like to go off of headline inflation because of the fact that it has energy and food mixed in there, which are the basic necessities. So you have to keep that in mind. That is what matters, right? You have to take inflation as a whole, not just depict what you think is going to work or not, because headline inflation matters when it comes to the Fed, and they need to get down to 2%, and right now they're at 4%. So you want to look at regular inflation in general. When it comes to CPI, I believe we were 3.2 on the last one. We came in at 3.1 on this particular one. So with that being said, again, it's still very, very sticky to get down for 2%. We did get projections into the new year as well. It looks like by 2026 we'll be at 2%. So this tells you on how long this inflation war will continue to be battled, in that even during the cuts, this is not going to just go away. This is going to be something that's going to be lingering for years to come, and what happens and why essentially interest rates have to stay where they're at. So being said, we did have monetary policy this week as well. This week we had monetary policy on Wednesday. It came out. There was no change in monetary policy, which was expected. But one thing that changed a lot is Powell came on like he does on every monetary policy, and he was dovish as dovish could ever be, because he has never been that dovish. Coming up to this point, you have to look back at the other essentially monetary policies that have come out. And he, even on the last one, we take a look at the last essentially like Q&A session that he had, and he said that they weren't even in discussion for rate cuts. It wasn't even on the table. And then he came out on Wednesday, which surprised everybody, and he was like, oh yeah, there's going to be 3 rate cuts next year. But again, being said, with all the dovishness that he had, he was essentially fueling the market, and the market just ripped off of what he said and try to get to all-time highs. Now we're only roughly about, I think, like 90 points away from all-time, making a new all-time high on the SPX. But a lot of other stocks are already hitting all-time highs again. Primarily all your big techs that essentially been holding up the market at this point. So with that being said, Powell was very, very hawk or dovish, and then to follow that, and this is what I talk about market manipulation. Powell knows, and if you watch any of his speeches before even coming into this one, you realize he is very selective on the words that he chooses when he goes to these Q&A sessions, and he'll pause if he needs to, but he's very, very selective and dances around a lot of questions to make sure, because people hang on every word. The markets move off of his words. So this is and him coming out and saying this, pumping the market back up. I mean, you can believe in it or not, but I think it's more so trying to pump into an election year. You still have to remember, we're coming into election year. They are trying to get this thing back to all-time highs, so that could be one more bullet point for election year. You have to understand that's what's going on, right? The administration has been, again, I'm not trying to get political, but things have been in a horrible state because of what's currently going on, and nothing has changed. Things have gotten worse. Now, given there's a lot of things leading up during the pandemic and the money printing that started all of it in general, and this is what was going to happen on the backside of it either way. I mean, I'm not favoring either side here. I mean, it's just my opinion, and I'm not a huge fan of what governments do, right? So with that being said, this being said, with Powell is very, very interesting, and the fact that he came in with three rate cuts again, it's unbelievable, right? Because he said he shot that question down quick as he could on every other Q&A session, but all of a sudden he was, yeah, definitely three rate cuts. Like, really? And then to follow it up, the next day you had Fed Williams and Fed Bostic come out and saying that it is. You had Fed Williams come out first saying we aren't really talking about rate cuts right now. So they just blew the whole thing out of proportion to pop the market, and the market started selling off a little bit yesterday. But the fact that they were talking about that, and Bostic says there was only two rate cuts by next year. Obviously, they're all going to have their own opinion about what's going on with rate cuts, but you have to understand again that we're not cutting back to zero. Like, that's going to be years before we get back to a 3% interest rate, right? Like, it's going to be like 26, 27, maybe, if inflation doesn't start rocketing back up. And that's what the concern is. And what has happened back in 1975 was essentially they thought they defeated inflation, and then led to some of the worst inflation we've ever had at 19% when they started cutting rates. And then the inflation just started skyrocketing to 19%, right? And so this is what's the biggest concern about coming into this next year, and why it's going to be such a pivotal year, because they are claiming, you have Yellen administration, the Fed claiming that there's a soft landing. They've achieved a soft landing, strong and resilient, and all these other things, when it's not the case. There are more and more cues pointing to that's not the case. The more people I know a lot more people now that are struggling. I don't know a person that hasn't been affected with what's currently going on. And now I'm seeing more people work overtime to try to make up for what's currently going on. Right? That's just about everybody I run into, whether that's at the shopping mall, or if I'm, just going to the gym, or just people in my life, right? Like, a lot of people are affected and continuing to be affected by what's currently going on. And nothing has gotten better. And then you have, again, Treasury administration, you have the Fed saying that everything is great. Everything's magical and golden right now. And it's not the case. Again, you can look back at articles around 2007 about all these different things. They were saying the same thing before the crash. So, and you have a lot of other indicators that are telling you the same exact thing. M2 money supply is depression levels, the Great Depression levels. And so once that starts getting fuel, yeah, there'll be quantitative easing. So yes, there will be cuts. I do expect cuts at some point next year. Even the market is now seeing a 21% chance of rates cutting as soon as next month. So I expect it around that February, March, like I've talked about, that baseline. I'm expecting it around there. And that those will be the first cuts, even if it's only, they say 3 cuts next year, right? That's only about 75 points. That's not a lot. That's not a ton. But people are thinking that's just going to be the pivot and everything's going to get better. No, this is inflation, right? These are the full cycles. Yes, I do believe the market will correct one last time to price in a recession. What I've always talked about to this point, I keep reiterating this: when they make that first cut, we price in a recession. And normally when that first cut comes, we are in a very bad state. And then we price in a recession. We haven't priced in a recession. We could correct about 30% again. Very strong. I do have possibilities, not try to project too far ahead, but try not to have too much macroeconomics in it, because it takes a long time for them to play out. And I'm more of a short-term active trader. So I try to at least project what could happen over the next month and a half. And then given what data comes in, you have to understand some data points really change a lot of different aspects, or some new information can change stuff. And this is why you can't be straight black and white when you're looking at the markets or just a stock chart, because charts do help. But even I've noticed over the past, year and a half, any kind of like regular patterns that you see on, whatever social media sites, they don't work, right? Those used to work maybe, 30 years ago, But now you got so many people in the markets that they don't work anymore. So breakouts actually fail. There a lot of these different chart patterns you're seeing just don't work. That's why you use supply and demand, and even supply and demand, even over the past like 2 months, right? You have breaks of support, and then it just spikes straight through back through it. So even supply and demand is getting hard. It's great for targets. I'm not saying I've always found that it has out of everything that I've ever learned, the best strategy has always been supply and demand because it has good target ranges. You need to know where you're headed. That is one thing you need to know either way. But with that being said, there's still other setups. Like you look for consolidation. You want the market to sell off. You don't want to be buying when it's ripping up. It's the last thing you want to be doing because you're playing with fire at that point. You should be way ahead of that curve. You should have been looking for the consolidation before that spike headed up. So these are the kinds of things you pay attention to, and you can typically find those consolidation areas around supply and demand. And so when it starts consolidating for a couple days, there's a good chance you could rebound, and that's what you try to take advantage of. Not when it's already ripped for 2 days and then everybody's FOMOing in. That's the last time you want to do that, because typically a stock will only rip for 3 or 4 days, and then you get into that 4th, 5th, 6th day. There's a very strong possibility it's going to sell off. It's not 100%. Nothing is 100% in this game, right? But you have to understand that 5 to 6 day, you're dealing with a strong possibility it's gonna cave. And depending on how you got there on those 3 to 4 days, if it's a straight up vertical move like we've been seeing, it's gonna crash twice as fast. That's the concern, and that's what we've been seeing over the past couple of weeks, especially since the last monetary policy where we paused, because it was kind of more of an official pause at that point. Now we're getting into the 3rd month where it's officially paused. Everything is perfectly lining up, coincidentally lining up for that February sell-off. That's our normal, that's our baseline. You have to go off of probabilities, and that's what we're looking at is where's our baseline? It is February. Now, if we don't sell off, if we don't correct, if we start cutting around that time, and the market in general doesn't correct or price in a recession at that point, where there's a possibility it may not, because you are in the election year and it does have a huge significance in the way the market's played out. We could rip all the way into the beginning of next year, and maybe this will be postponed until 2025. This is why you can't go off of macroeconomics all the time. You have to still kind of gauge where the baseline is. What is the current sentiment? Right, we've ripped. I talked about ripping this month. It could be a very strong possibility because there wasn't a big enough impact going into it, and we knew it was election year. And the manipulation that happens, if you haven't seen the manipulation that's been happening, where have you been? Have you even looked at a chart? Right, there's massive manipulation. I'll look more at that chart, but so that was my rant for that little piece. I'll continue to rant here in a bit, but I want to. So this is the misleading information. You have Powell saying that there's going to be cuts. People always blow his words out of proportion, whatever the case is, but he was very dovish on it. Again, they weren't even talking about it. That's why Williams was more accurate in how they approached it in the last monetary policy by saying they aren't really even talking about rate cuts right now. Right? That's not something, there's just something on the radar. And then the dot plot came out as well. So that had a huge impact on it actually showing. But again, the dot plot said that we're supposed to have 4 this year and we didn't get any. So again, it's a moving target. You have to understand they are trying to confuse you, right? If it was plain black and white, then you wouldn't be able to, but you have to understand where are the masses. The masses right now, everybody's FOMOing in at these all-time highs. You don't want to be FOMOing at all-time highs. That's not what you want to be doing. You've already missed the train. You need to wait until it at least gives a healthy pullback. So if you could wait to at least that after we get the next earnings cycle on that pullback, I talked about all stocks after they report, they got about 3 to 4 weeks after the fact where they just sell off. That's the point you need to be buying, not buying into. You should have already bought if you're buying into essentially the earnings cycle. So with that being said, Citigroup also shut down municipal business in an effort to improve profitability. So again, these banks are making lots of cuts. We've talked about the bank branches cutting. They are trying to reduce risk. A lot of people are anticipating next year being bad despite a quote unquote rate cut. So you're getting a lot of mixed messages. But where's the herd going? The herd's running right off the cliff right now. Are you going to be with the herd? Are you going to wait back and be ready for when it starts selling off? When you have that normal cycle where it sells off, that's what we're betting on, is the normal cycle that's going to sell off in February. And then maybe at the same time, they can price in a recession. That's what we're hoping for. But again, you also have to take in consideration it is the election year. It may not correct then. So maybe we're going to kick this can till after the new president comes in, or whoever is president at the time. So after elections, then we can correct at that point, which would essentially lead us into 2025. And then we get that massive correction around February next year in 2025, or the following year, I should say at this point. So again, a lot of people taking risk off. Banks are cutting down. They're cutting out branches. All right. They're trying to remain profitable. This pressure we've been seeing on the banks for the past like 6 months is now being applied to business, because now we're seeing tons and tons of layoffs. And so that's what's important there. Now, upcoming events this week, we have GDP revisions. I don't really know how much impact that's going to have. If that changes dramatically, that could have some impact on Thursday. Again, we don't really have any major event scheduled that's going to do anything until we get into the new year. We got core PCE on Friday. Again, not really going to have any major impact. You just need to be aware of them, because there's always a black swan, right? Like these specific events, right now they don't have weight, but there could be something that dramatically changes in those reports, not expected. That's why they call it a black swan event. So if it does occur, be aware of when those days do occur. So if it does occur, you're not swinging the next day, and then something happens in that black swan event, and then you're like, oh dang, well now it just corrected 10-15% on that stock. So that's the last thing you want to be doing there. So that being said, upcoming events, monetary policy, next one's not till January 31st, and then we kind of got some more in March and May, and then core inflation, which is on the 11th, and I got 11th all the way down. They're not all on 11th. That's incorrect. I have to fix these last couple ones, which I'll fix on the blog post. But this 11th was the next core inflation here. Again, no major earnings till the 15th of January, and then again, our changes here. Again, not much has changed. Everything is kind of quiet. It's actually rolling back quite a bit more on this as well. This is something I do need to update as well for the blog. But with that being said, that is pretty much what we got for that information. I should have updated those already. I wasn't paying attention to that. I was more concerned about, I wanted to jump on here and start talking about what was going on with inflation report and what was going on with monetary policy. And it was really kind of just, I'm not going to lie, it was teeing me off the fact that they came in, they said that they were super dovish about it, and the market started ripping. And then they come around and kind of walk back all their statements the next day. But it wasn't Powell, right? Powell's going to have more weight on anything that comes out there. And so that you had other Fed members come out and try to walk back his statements you talk about manipulation. That's one of the big manipulators out there, because they know that once Powell's voice hits that headline news, that's going to manipulate markets. And so this is, again, why he's very intricate in the way he wordsmiths all his words. And he knew exactly what he was saying when he came out and said it, because he knows today or the following day that the other Fed members that come out and start talking, we're going to have some weight, but they're not as weighted as perhaps Powell's weight when it comes to those things. So now that we're looking at the SPX, so I'll update those. So check out the blog that's down in the description below, and you can see what's going on there. I keep all the weekly notes on there, and then some of the insights for this video on there as well. So kind of gives you the best of both worlds there. So SPX, like I said, we kind of pretty much just ripped up ever since. This has essentially been since the last monetary policy, and then this has been since the new one. This week we just absolutely ripped. We were actually here when we started ripping up because of Powell, and then we're kind of just sitting sideways now. The market is only, like I said, about a couple points away from all-time highs again. The red mark here is where we have all-time highs for SPX, right? And that's a lot of individual stocks have already hit their all-time highs again. Like Apple has already hit back to the all-time highs. Some are not, but Apple being a safe haven, a lot of people will go there first, especially with all the the uncertainty coming into next year. So that's why those kinds of moves would typically happen. So we'll see. Again, this is very parabolic. You don't want this. So I think this, again, with the official pause, which started here, which pretty much saved the market. You can say that was even manipulation there because that should have broke down. So they were officially calling a pause there, and then we just kind of been grinding up, and then another pause push us up. This also plays in the next earnings cycle as well. I think this is your earnings push along with the pauses, and then this week will be interesting to see if we can even come close back to all-time highs. I think they will continue to try to push this thing up, but we'll see what happens there. I think this might just wait until essentially the new year. Again, the next 2 weeks are going to be really quiet and volume is going to die down. It's not saying it can't push up the market. There are plenty of times when the market's volume does die down and the market's still pushing. So we'll continue to watch to see how that plays. But if we do hit all-time highs, I don't know. We'll see. We got a lot of people saying we're going to go up to 7,000 by next, or 5,000 by next year. So we'll see if that happens. Maybe it's a possibility, maybe not. But again, you have to be very careful on moving forward. I think this is a very cautious level of trying to be jumping in here. Again, depending on there's still some stocks that have been really still beaten down pretty heavy. That haven't really done anything. Ideally, those are the kinds of ones you want to be looking at, not these ones that are at all-time highs right now. So with that being said, SPX, again, be an interesting state as of right now. But again, very parabolic. We don't want this. We want better structure. At least it should have pulled back. Like, this is why I have these zones. Typically, you have a nice push, then a pullback, then a nice push and break. We kind of saw that on the weekly here with this pullback and push and break back to all-time high. We'll see if this dies off. Again, that pullback in February, expecting maybe a pullback to 4,300, 4,400. Again, if we price in, if a cut's associated with that baseline pullback, it could start leading to a newer low. But again, we'll see. We'll see if we hit an all-time high. I'd laugh if this thing could not get to an all-time high as close as we currently are on that last pullback we had. I mean, we made it up to here at the 46 and we pulled back heavy. That's kind of what you want to see for a bull market, but you don't want to just do this straight parabolic. I think it should have had some structure coming up. And the fact it just went parabolic, because you get these parabolic moves, even like here. Here was a big parabolic move and we sold off even more. That's what I'm concerned about, what's going to happen here. As you get these huge parabolic moves and you get these massive rip backs. But again, we'll see. I mean, we did correct quite a bit from this point, but I don't believe that's enough to price. That's not enough to price in a recession. You know, that was 27. Not saying that it wasn't a big correction, but again, any kind of big recessionary, you're gonna have recessionary worries like this for the next, like I said, 2 years. But again, I think after this next one, we start pricing in cuts. That's when we typically price in a recession. And so we'll get our true correction when that happens. And you have to understand, there's a lot of indicators out there that are historical levels we haven't seen in a very long time. And to think that we've magically figured it out on how to do a soft landing, there's plenty of indicators out there that are telling you that's not the case. So again, we'll continue to watch and see what happens there. But that's what we're currently looking at there. Let's take a look at Bitcoin. Bitcoin again. Obviously monster rip up with the spot ETF and everything. I think January 10th is when the ETF, there's been a lot of discussion about that as well. So we'll see what happens there. I've talked about this reaching up to this 48 level before to try to do a retest some of these levels, because we haven't touched any of those levels for a while. So again, I'm waiting for this to pull back for me to get better entries on positions here. Will we get newer lows? Again, it's all about timing. You're in an election year as well. So there's a lot of manipulation going on. But ultimately, what we're really looking for here is to see if that baseline and what this does, because Bitcoin isn't going to break away from the market, not in this current environment. Again, there's a reason why there's the economy in general, and again, there may be transition of people coming into crypto. Again, you have to understand that the narrative overall is a lot of people are still very scared of crypto. And so even though there's infrastructure being built out, the narrative is still being displayed out there that it is bad. And you still had many other major representatives out there saying that it was is for money launderers and drug dealers and everything else that are using crypto. So they're still painting that narrative, despite that they're building infrastructure behind the scenes, or that really isn't highlighted in news. So these are the kinds of things you have to pay attention to. So again, we'll continue to watch to see what happens here. But again, I think you're getting at a point to where this needs a significant pullback. You can't just have these parabolic moves like this. And I understand there's volatility in this thing, but you have to understand it also corrects pretty heavy on the same token. So I expect this thing to at least try to pull back maybe to the 30K or 25K here. Again, that's kind of the baseline. I think when we do our normal market correction around February, March, which typically happens right before the halving, which is in April. I think it's April 17th. So typically when that does happen, we'll look to see if this thing starts ripping back up at that point. So, and then we'll take a look at our usual suspects. Tesla has been essentially nothing but chop over the past couple of months. It's had some big sell-offs. Again, playing this big range, essentially from the 200 up to 271. So I think you are going into an earnings cycle, so it's trying to price that in. I wouldn't be surprised if this thing tries to attempt to go for 300 again, but we'll see what happens. Again, a lot can happen between now and then we'll continue to go from there. So, and that's sitting on the 22nd is kind of what we're looking at for Tesla. Again, there's a question mark here because they're not really sure. That's kind of what they're guesstimating is roughly around the 24th is what they're saying. So we'll see what happens there. But yeah, so we'll see what happens with Tesla. I don't expect this thing. It could be up to this 269 level. I think by earnings. And if it does good, maybe it retests 300. Otherwise, it might just continue to chop. It hasn't really been having some heavy sailing just because Elon Musk has been in the news a lot lately. So just keep that in mind as well. Also, probably why it hasn't broken out. But again, I still really like this. Next year, I think this thing can still really correct. If the market really wants to correct, again, you're still watching that 200 level and again, that 150 level. When we get back down to 100, it's really hard to tell. It's again all about timing. That's why I don't like to go too far ahead. We've already kind of pushed up, so the events have to play in order as well for that thing to pull back enough. Palantir, again, been kind of that's been doing really well, but hasn't really pulled back. It's been the contracts it's been getting has been phenomenal. I think a lot of people still don't see the value in it, but the AI that it's generated and what it's doing is absolutely phenomenal. So we'll continue to watch this, expecting this to at least pull back to the $14 level. We do have earnings coming up, so we'll see if this thing does break out. Again, if it does get included in the SPX as well, that's going to essentially institutions have to buy it and hold it. So that would essentially cause this thing to start running up pretty good. So one thing is we do have to keep in mind if that is approved. We don't know when that will happen. We do have a new earnings cycle, and the odds of that inclusion could happen around those earnings cycles. So you need to keep that in mind. But from there, we'll take a look at BA. BA's gone absolutely parabolic. This is what I'm talking about. This is essentially your value gauge, and it's been ripping like crazy. It completely ignored all support and everything, just sold off like crazy, like it was nobody's business, and then V-shape. This is pure manipulation is what this is here. So, but this thing is almost back to all-time highs. Once it breaks that essentially the 279 and be back at all-time highs. So we're very close to that coming into earnings. So keep an eye on that. Again, your support would roughly be around here, around that 255. See, make sure it holds that. If it sells below that, could be getting a deeper dive to the 234 or potentially even the 218. So you need to be watching those levels. And then you have JPM, which has done the same thing, sold off pretty heavy. Then monster rip. So we'll see. But the top of this is 170. May break out. Again, we're all watching that February time period for that level. But it definitely needs a hold in 156. If it sells below that, we're going down to at least the 142. So keep those levels in mind. But that's pretty much what I got. That's what has been going on. Again, you need to be very cautious moving forward. There's a lot going on. Again, we're a very, very pivotal stage coming into an election year. So there's a lot of manipulation that can happen. Again, they want to see all-time highs coming in an election year. So a lot of manipulation, but nonetheless, as long as you're conscious, again, remember, none of this is financial advice. Now we'll see you guys on the next one.